Hi everyone, in this video let's discuss about foreign exchange management overseas investment regulations 2022. We understood that the regulation means the directives issued by the regulatory authority, say for example in this case it is RBI. So RBI by notification number so and so in excess of the powers conferred by subsection 1 and subsection of section 47 of the FEMA, the reserve hereby came up with the foreign exchange management overseas investment regulations 2022. There are a few definitions here. Act here would again mean the FEMA, and debt instruments will have the same meaning assigned to it in the rules. Okay. Now, financial commitment. So these are regulations, there is directives, right? So financial commitment by Indian entity by modes other than equity capital. I have made a financial commitment with a foreign entity, but by way of other than equity capital. So what does this mean? The Indian entity may lend or invest in any debt instrument issued by a foreign entity or extend non-fund based commitment to or on behalf of a foreign entity, including overseas step-down subsidiary of such Indian entity, subject to the following conditions within the financial commitment limit as prescribed in the foreign exchange. See, debt instrument we know, like the convertible debentures non-convertible debentures that will be known as their instruments. Non-fund based commitment that, for example, it includes a guarantees, letter of credits that will be forming part of non-fund based commitments. So the financial commitment limit we have discussed in the last class with respect to ODI. For everything we have discussed OPI, right? The same limits will apply here. That is the overall limit. Okay. So the Indian entity is eligible to make overseas direct investment. First, it should be eligible to make the ODI. Then, the Indian entity has made an ODI in the foreign entity. It has made some ODI investment in the foreign entity, or the Indian entity has acquired the control in such foreign entity at the time of making such financial commitment. While making such financial commitment in the case of debt, other than equity capital, it has already been invested in the equity capital and has obtained the control of such foreign entity. The financial commitment shall be reckoned towards the financial commitment limits that we have already discussed. Now, moving on next one. Financial commitment by Indian entity by way of debt. We first saw that this is the eligibility criteria. Okay. Now, for each thing there is some more some more points, right? For financial commitment by Indian entity by way of debt. See, an Indian entity may either lend or invest in the debt instruments issued by the foreign entity. Okay, but it is subject to the conditions that the loans should be secured, that is duly backed by a loan agreement, where the rate of interest shall be charged on an arm's length basis. Okay, arm's length basis means what? At the same price would be charged for an unrelated party. That price would be known as arm's length price. Okay, there is no conflict of interest. Okay, so what are the conditions here? The loan should be backed by a proper loan agreement and the rate of interest should be on the arm's length basis, and you should not have any conflict of interest. Okay, then financial commitment by way of guarantee. It is a non-fund based facility, right? The following guarantees will be issued to or on behalf of the foreign entity or its step-down subsidiary in which the Indian entity has acquired control through the foreign entity. Namely, see, I can issue guarantee or I can be the guarantor for or on behalf of the foreign entity or its step-down subsidiary on which I have gained the control via the foreign entity. Okay. What types of guarantee I can issue? I can give a corporate or a performance guarantee, or such corporate or performance guarantee can be given by my group entity, by my group company. Okay. Which is like holding of mine or subsidiary of mine or a promoter group of company of mine. Okay. But it should be a body corporate. Body corporate we discussed, right? Company, LLP, and then partnership firm. Right. Then guarantee by the resident individual promoter of such Indian entity. The director or the promoter can give a personal guarantee for such foreign entity. Bank guarantee, which is backed by a counter guarantee or collateral by the Indian entity or its group company as above, and issued by a bank in India. It's not a foreign bank, it's a bank in India. Then, where the guarantee is extended by a group company, it shall be counted towards utilization of its financial commitment limit independently. And in the case of resident individual promoter, the same shall be counted towards the financial commitment limit of the Indian entity. See, while the guarantee is being issued by the group company, then for the group company there will be some particular limit, right? Financial commitment limit that has to be compared. Okay, that has to be checked. Okay, but if the guarantee is issued by a resident individual promoter, then it will be added and compared with the financial commitment limit of that particular Indian entity to which he is a promoter. Okay, then provided that where the commitment under sub-regulation 1 is extended by a group company, a fund-based exposure to or the Indian entity shall be deducted from the net worth of such group company for computing its financial commitment limit. Such group company has given a commitment now or extended the guarantee now. Okay, it has also given some fund-based commitment to the foreign entity. Then such will be deducted from the financial commitment limit and net. After that, when you have to check. Okay, but there's this amount of guarantee. For example, I can give maximum, the financial commitment limit could be 100 crores. Okay, I have already given 60 crores fund based facility, so only additional 40 percentage can be given as a guarantee. 40 crores can be given as a guarantee. Anything beyond that I cannot be able to give a guarantee. That is the limit. Okay, then provided further that where the guarantee under subregulation 1 is extended by the promoter, which is a body, corporate, or an individual, and it shall be a part of that promoter group. Okay, then SEBI regulations, the definition of promoter group is as per the SEBI regulations. Then, no guarantee shall be open-ended. You should fix the limit for that guarantee. There is not a open-ended. Any amount, if we make loss, I will guarantee. No, that's not the case. Okay, for a particular limit which is within the financial commitment limit, I should be giving the guarantee. That is known as closed-ended guarantee. That's what they are meaning. No guarantee should be open-ended, which means guarantee should always be closed-ended. The guarantee to the extent of the amount invoked shall cease to be the part of non-fund based commitment but be considered as lending. See, for example, I have given a guarantee of 40 crores, right? They have invoked, the other party has invoked, okay, up to 10 crores. Then it will be removed from the non-fund based facility and moved to lending, the fund-based facility. Then, where a guarantee has been extended jointly and severally by two or more Indian entities, 100% of the amount of such guarantee shall be reckoned towards the individual limit of each of the such Indian entities. See, for example, I have given a guarantee, but I have given it jointly and severally, which means I have a joint and several liability. I have a joint and several liability. Therefore, I have to reckon where that 100% of that amount falls within the financial commitment limit of each of that particular entity. Say, for example, okay, a guarantee is being given for 100 crores. Okay, guarantee is being given for 100 crores. Company X has a financial commitment limit of 120 crores. Okay, and company Y has a financial commitment limit of 80 crores. Then the maximum possible guarantee could be only 80 crores and not beyond that. Okay, so 100% should be within the individual limits of that each of the particular joint entity. Now, in case of performance guarantee, 50% of the amount should be reckoned towards the financial commitment limit. Okay, only 50% will be checked for the financial commitment limit in case of performance guarantee. Rollover of a guarantee shall not be treated as fresh financial commitment where the amount of on account of such rollover does not exceed the original amount of guarantee. See, for example, I've given a guarantee agreement. Okay, that guarantee agreement period has expired. Now I'm going to give a new guarantee agreement for the same amount. Then there is no additional amount of guarantee, so I need not check treat it as a new financial commitment. Okay, instead the same will be continuing. Okay, only the period has changed now. For example, I have given a 100 crores guarantee earlier. Now I am adding on 20 more crores. That is 120 is the new agreement. Then the 20 alone will be treated as fresh financial commitment. Financial commitment by way of pledge or charge. An Indian entity which has made ODI by way of an investment in equity capital in a foreign entity may pledge the equity capital of the foreign entity in which it has made an ODI or its subsidiary outside India held directly by an Indian entity in a foreign entity and indirectly in its subsidiary in favor of the AD bank or public financial institution or overseas lender for availing fund-based facility or non-fund-based facility for itself or for any foreign entity in which it has made an ODI or step-down subsidiary or in favor of debenture trustee registered with SEBI for availing fund-based facility for itself. See, for example, okay, I have invested okay, in equity capital rupees 10 crore. I, being an Indian entity, has invested in the equity capital of a foreign entity for rupees 10 crore. I can take this document and go to a bank and get fund based or non fund based facility. One point. Okay. Point number two. Either I can get it for myself or I can get it for that foreign entity in which I have made the ODI or its subsidiary. Okay. See, I have invested in the equity capital of a foreign entity. Okay, it has subsidiary. Fine. Now I take this document, go to a bank or a financial institution, ask, please give me money. Okay, it says you can take either fund-based facility or non-fund based facility. Okay, this amount can be utilized for myself or for the foreign entity or for its subsidiary. Clear? Now, or I can go to a debenture trustee for availing the funds by way of debentures. Clear? Then create a charge by way of mortgage, pledge, hypothecation, or any other identical mode on an asset in India, including the assets of the group company or associate company, promoted director in favor of the equity bank or like financial institution in India or overseas lender as security for availing the fund-based or non-fund-based facility or both, or for any foreign entity in which it has made an ODI or for a separate subsidiary outside India. See, I can create a charge pledge or something on that foreign entity which I have the control. Okay, and take it asset. Okay, we are in India and go to the public financial institution or a bank and ask for facilities and use it for the foreign entity or its subsidiary. Okay, and I can also use the asset outside India of the foreign entity. Okay, or the subsidiary and go to a bank based on that assets as a security. I can take either fund based or non fund based facility, either for myself or for the foreign entity or for the subsidiary. And I can also go with the assets to the dependent trustee asking for fund based facility. But it is for only myself. For debenture, remember, if I go to a debenture trustee, then the funds can be used only for the particular Indian entity. Then, provided the value of pledge or discharge or the amount of facility, whichever is less, shall be reckoned towards the financial commitment limit. Okay, see, if I am taking the pledge for the first time, then it has to be within the financial commitment limit. Okay, if it is an add-on, only the add-on will be taken. If it is continuing but agreement date is only changed, then it is not a new fresh, it's not a fresh commitment. Then overseas lender in whose favor there is such a pledge or charge shall not be from any country or jurisdiction. See, I go and ask money. Okay, say for example, the Indian government has said you should not take money from country X. Okay, I cannot go to the overseas lender in country X and ask for money. That's what the point says. Okay, then the creation or enforcement of such pledge or charge shall be in accordance with the provisions of the Act. Everything should be within the provisions of the Act. That's why we're reading it, right? Negative pledge. What does this mean? Negative pledge means, what does this mean? Negative pledge means there is a clause in the loan agreement that states that the debtor does not encumber specific debtor's asset, okay, which can be called the collateral until the loan is repaid. For example, I'm saying that you can take all these except that except will be known as negative pledge. Okay, I'm not creating a charge. Acquisition or transfer by way of deferred payment, where a person resident in India acquires equity capital by way of subscription to an issue or by a purchase from a person resident outside India, or where a person resident outside India acquires equity capital by way of purchase from a resident in India, and West equity capital is reckoned as ODI. When the equity capital is treated as ODI, then the payment of amount of consideration for the equity capital may be deferred for such a definite period. Is not an indefinite period, it is a definite period from the date of agreement as provided in such agreement, subject to the following terms and conditions. See, I have obtained or purchased the equity capital as loan. Like for example, I've said that I will pay the consideration sometime later. Okay, deferred, but for a definite period of time. Okay, namely the foreign securities equivalent to the total amount of consideration shall be transferred or issued as case may be upfront by seller to the buyer. I should obtain first the foreign securities, and the full consideration finally paid shall be compliant with the applicable pricing guidelines, which means it should be in the arm's length price. Okay. If not, it should be supported by the registered valuer, right? And provided that the deferred part of consideration in case of acquisition of equity capital of the foreign entity by a person in India shall be treated as non-fund based commitment. For that period, it will be treated as non-fund based commitment. Then the buyer may be indemnified by the seller to up to such amount and subject to such conditions as may be specified. Then, provided the agreement is in compliance, agreement should be in compliance with this act and the rules and regulations. Mode of payment: a person making a being a resident in India making overseas investment may make payment through banking channels. There's no cash, only banking channels. Okay, either it could be the funds held in accordance with the provisions of this act. It is foreign currency account or the resident foreign RFC account. Okay, then by way of swap of securities by using the proceeds from the ADRs, GDRs, or stock swap or ECBs. Okay, or a financial commitment by way of debt by an Indian entity. Only these ways you can make the payment. Then obligation of a person resident in India. A person resident in India acquiring the equity capital in a foreign entity which is reckoned as ODI. Okay, shall summon. What are the duties? Obligation means, for example, duties or the liabilities of the person resident in India. What is the things he should do? Okay, first he should think and confirm that he is going to invest in the equity capital, which is going to be treated as an ODI. Then he should submit the aid to the AD bank, the share certificates, or any other relevant documents as per the applicable laws to prove or to be the evidence for his such investment within 6 months from the date of effecting the remittance. 6 months from the date of effecting the remittance, I have paid. From that, in 6 months, I have to submit the share certificate, or the date on which the dues to such person are capitalized, or the date on which the amount due was allowed to be capitalized, as the case may be. See, either within 6 months from either of 3 dates, affecting the remittance or date of the dues of such person are capitalized, or on which it is due to be capitalized. Okay, then a person resident in India through the AD bank should obtain unique identification number, that is UIN. Okay, that he should obtain from the Reserve Bank of India for such ODI investment. Okay, before sending the outward remittance or acquisition of equity capital, whichever is earlier, before sending the remittance or acquiring the either I could first obtain the shares and then settle by way of deferred consideration, or I could pay first, right? So before, whichever was earlier, I should obtain a UIN from the Reserve Bank of India through the I mean AD, okay, AD Bank. Then a person resident in India shall making ODI shall designate an AD bank and route all transactions relating to that particular UIN through that bank only. Say for example, SBI New Delhi. Okay, I'm routing all the transactions with via SBI New Delhi. Then I should give them the particular UIN and say that you are going to take care of all these transactions with respect to this particular ODI having this so and so UIN. Then, provided that more than one person resident in India makes a financial commitment in the same foreign entity, all such persons shall route all the transactions using that UIN through the AD bank designated for such UIN. For example, UIN would be like for this particular shares of ABC Inc. Okay, I'm going to obtain shares of ABC Inc. For that, I obtain the UIN from the Reserve Bank. Okay, for anybody who is going to um, acquire the shares of ABC Inc. will use this UIN and seek the service of that particular AD bank which is designated. If it is, there are more than one person who is going to invest or make financial commitment in that same entity, then a person resident in India having an ODI in a foreign entity wherever applicable shall realize and repatriate to India all dues receivable from the foreign entity with respect to the investment in such foreign entity, the amount of consideration received on account of transfer or disinvestment, and the net realizable value of the assets on account of liquidation within 90 days from the date when the receivables fall due, or the date of transfer or disinvestment, or the date actual distribution of assets made by the official liquidator. See, if it is, I am going to sell, okay, okay, transfer, then from the date the receivables fall due, okay, or the date of transfer or disinvestment, okay. If the liquidator is going to distribute, then from the date of actual distribution of assets made by the official liquidator, I have to repatriate and realize the funds within realize the funds and repatriate to India within 90 days from such date. Okay, then who's eligible to make ODI may make remittance towards the earnest money deposit, EMD, known as EMD, or obtain a bid bond guarantee from AD Bank for participation in bidding or tender procedure for acquisition of a foreign entity. See, there could be a tender for acquiring the shares. For that, you could make some deposits, right? Tender deposits. For that, you could seek the help of AD Bank. So every transaction, you should seek the help of AD Bank, provided that in the case of open-ended bid bond guarantee, it shall be converted into closed-ended guarantee not later than 3 months from the date of award of the contract. See, generally, under this regulation, you cannot give a open-end guarantee, right? You should no guarantee shall be open-ended, right? So, tender they could ask for open-ended guarantee. Okay, you could make it, but once you are receiving that particular contract within 3 months from the date of award of such contract, you should make it as closed-ended. You should make it as closed-ended. It's really beneficial. Okay, then reporting requirements for overseas investment. Unless otherwise provided in these regulations, all reporting by a person resident in India as specified shall be made to the designated bank, AD Bank, in the manner provided in this regulation and in the format prescribed by the RBI. A person resident in India who has made ODI or financial commitment or disinvestment in a foreign entity shall report the following, namely: 1. The financial commitment, okay, which is towards the financial commitment limit, uh, or not at the time. See, financial commitment limit. Okay, financial commitment limit, whether it's reckoned towards the financial commitment limit or not, at the time of sending, I have to disclose or report at the time of sending or making the financial commitment, whichever is earlier. I have just put an agreement which states that I have made a financial commitment that time or the date of sending the outward remittances, whichever is earlier. I have to report it. This investment within 30 days of this investment proceeds. Receipt of the disinvestment process within 30 days I have to report it. Okay. See, this is for repatriation. I have 90 days. Okay. For reporting, I have only 30 days from the date of receipt. Okay. See, this means disinvestment has taken place on, say, for example, 1st April. 1st April 2023. Okay. Then within 90 days, which is like, for let's assume blindly as 3 months. Okay. It's 90 days. Okay, for the examples, let's take it as April, May, June. Okay, so 30th June, within 30th June, I have to repatriate from the date of receipt of funds. Okay, I have bought it on 28th. Okay, 28th June. Okay, then within 30 days from 28th June, I have to report it to the reported to RBI through the designated AD bank. Okay, then restructuring within 30 days from the date of restructuring. A person resident in India other than a resident individual making an overseas portfolio investment or transferring such OPI shall by way of sale shall report such investment or transfer of investment within 60 days from the end of the half year in which in such investments or transfer is made as of September or March. And see, for example, this is like I have made an investment, I assume on 30th September. So within 60 days from the end of the half year, it also half year ends on September. September and March is taken as half year. Okay, it's not like from the date you have made and within 6 months, then 60 days. No, September and March will be the half year ends. Okay, within 60 days from the half year ends, you have to report. Okay, if you are a person resident in India other than the resident individual making a overseas portfolio investment, provided that in a case of overseas portfolio investment by way of acquisition of shares or interest in the ESOP, the reporting shall be done by the office in India or branch of an overseas entity or subsidiary in India of the overseas entity, or the Indian entity in which the overseas entity has a direct or indirect equity holding, while the resident individual is an employee or a director. Say, I have obtained the ESOP, okay, of such foreign entity. Okay, the reporting should be done by the office in India. Either it can be a branch or something of the overseas entity, or a subsidiary, or only entity where the overseas entity has a control via direct or indirect holding. Okay, then a person resident in India acquiring the equity capital in a foreign entity which is reckoned as ODI shall submit an annual performance report with respect to such foreign entity every year by 31st December, and where the accounting year of such foreign entity ends on 31st December, the APR shall be submitted by the 31st December of the next year. See, for example, say for example, there is an I have acquired the equity capital and control in a foreign entity. Okay, and it is stated as ODI, then I should submit an report known as annual performance report of that foreign entity. Okay, I have to submit this every year on or before 31st December. Okay, but the 31st December is the financial year end for that particular foreign entity, then you have to submit it within 31st December of the next year. Okay, if 31st December 2022 is the financial year end, then you have to submit it within 31st December 2023. Provided such no reporting should be required when a person present in India is having less than 10% without control. Okay, and he doesn't have any other financial commitment and the foreign entity is under liquidation. In these two cases, you need not submit the APR. For the purpose of the sub-regulation, the APR should be based on the audited financial statement of the foreign entity. You should submit the APR based on the figures given in the audited financial statement of the foreign entity, provided that by the person resident in India does not have control in the foreign entity and the laws of the host country or something. Okay, and the laws does not provide for mandatory auditing. Then the APR may be submitted by the unaudited financial statement certified, but should be certified by the statutory auditor of the Indian entity. See, they have other job here now. There's a job opportunity here, which means APR should be certified by the statutory auditor of the Indian entity or by a chartered accountant where statutory audit is not applicable. Because here the entity would cover both the partnership and the company, right? See, company for them, the statutory audit is applicable. For partnership firm, statutory audit is not applicable. That's why it has to be certified by a chartered accountant. In case more than one person in India have ODI in the same foreign entity, the person holding the highest stake, see, one person holds 60%, okay, then rest holds 15, 15, okay, 15, 15, 15, okay, and rest 5% is held by someone. Okay, I think it's very big, right? Okay, sorry. 60, 15, 15. Okay, rest all by hold by millions of shareholders. Okay, let's leave it. Okay, so this 3% who's holding 60, 15, and 15, 60% holding person should summon this APR. Okay, but if think everybody is holding 30 percentage and 10% is held by millions of people, okay, then this, if everybody is holding the equal percentage, then it has to be submitted jointly. Then the person resident in India shall report the details regarding the acquisition or setting up or winding up transfer of step-down subsidy or alteration in shareholding pattern during the reporting year in the APR. An Indian native is made ODI shall submit a annual return of foreign liabilities and assets within such time as to be decided by RBI from time to time to the Department of Statistics and Information Management (DSIM), Reserve Bank of India. I have to submit annual return on foreign liabilities and assets, okay, of the reporting entity as Indian entity to RBI, DSIM department. Then delay in reporting. A person resident in India who does not submit the evidence of investment within the time or does not make the filing within the time specified, then he may make such submission or filing as the case may be, along with the late fees within such period as may be advised in the rates in the manner as may be directed by RBI from time to time. That period shall be within a maximum period shall be 3 years from the due date of submission or filing, as the case may be. I have not submitted the evidence or I have not made the filing as required within which is there in regulation 10, then I can file it with a late submission fees within the maximum of 3 years from the due date of such submission or filing. A person resident in India for submitting evidence or any filing related to overseas investment in accordance with the Act or regulations made thereunder before the publication of these regulations in the official gazette, and who has not made or does not make such submission or filing within the time specified thereunder, make such submission. See, before this Act, before regulations come into picture, there is no requirement to submit, right? So now once this regulation has come into picture, they would have given some transition period. Within that, you have to submit. If you are not submitting it, you will be imposed or allowed to submit the filings along with late submission fees. And the same 3 years period can be availed for late submission. Okay, then restriction on further financial commitment or transfer unless you make um, or comply with all the submission and filings, you will not be able to make any other financial commitment. Say, for example, I have already been, I have already not submitted some filing, okay, from evidences, okay, then I will not be able to obtain or invest again or make any other new financial commitment, okay, until the delay is regularized. So a person resident in India who has made a financial commitment in a foreign entity in accordance with the act or regulations or rules made thereunder shall not make any further financial commitment whether fund based non-fund based, directly or indirectly, towards such foreign entity or transfer such investment till any delay in reporting is regularized. So with this, we have completed all the amendments with respect to FEMA, which is applicable for May 2023 examination. Stay tuned for other areas of amendments for May 2023 examination. Thank you very much.